So most people think your mortgage fate lives and dies by one number, your FICO score. Here's my take. That monopoly is possibly coming to an end. And if you move now, you can literally turn this change into cheaper money and faster approvals. So the big update is this. President Donald Trump and our elected government officials have been duking it out with the biggest credit entity, the Fair Isaac Corporation, also known as FICO. What's crazy is this company contains the majority of the scores. 90% of lenders in the U.S. use some version of FICO when making credit decisions. It truly has become the industry standard for mortgages, auto loans, credit cards, and personal loans. There are also a lot of different FICO models. So FICO 8 is most widely used for credit cards and general lending. FICO New is actually newer, but not adopted everywhere just yet. The FICO Auto Score and FICO Bank Card Score have their own industry-specific versions. Mortgage lenders often still use older models too, like FICO 2, 4, and 5, just because of even regulations. Now, the big change that is happening is FHFA, the Federal Housing Finance Agency, has approved lenders who issue mortgages that will be sold to either Fannie Mae and Freddie Mac. They may now choose to either use the classic FICO score or the Vantage 4.0 score when underwriting those loans. This marks a huge shift. For decades, mortgage loans destined for Fannie or Freddie Mac were required to rely only on FICO models. Now there is a lender choice allowed between the two models. The change is immediate, meaning that this new policy is in effect now for those mortgage originations. Part of the rationale behind this change is to bring more competition into the credit scoring. It's really to reduce the reliance on a single model, potentially lower costs, and broaden credit access, especially for people who have those thin files. So now the U.S. mortgage lenders selling to Fannie Mae and Freddie Mac can now use the Vantage Score 4.0 or stick with the classic FICO score during this transition. This means rent payments and newer data can finally help you qualify. So for renters, first-time home buyers, and entrepreneurs, this is a massive unlock. My name is Brittany Cowley, and my goal is to help you turn credit into capital and capital into freedom. So today in this video, I'm going to show you what's changing, who wins, and the exact moves to make so you guys are lender ready. So I believe this isn't just a scoring change, it's a strategy change. For years, people with solid rent histories or thin files were shut out from lending because classic FICO ignored that data. With the Vantage Score 4.0 in the mix now, responsible renters and rebuilders can finally show the story behind the number. If you prepare the right way, monitor, document your rent, clean errors now, you can win rate sheets you didn't qualify for last year. Most folks will wait for lenders to figure it out. My Wealthy Lab clients are already preparing and getting ready to capitalize on the change, so you need to be getting ready too. Quick story. A client came to me rebuilding after a rough patch. Cash flow good, rent perfect for years, but the classic FICO wasn't giving credit for that history. Under this new allowance, we documented on-time rent, cleaned 2 reporting errors, and tightened the utilization. The result, pre-approvals at a rate they couldn't touch last year. Same person, better data. That's the difference that this change can make. And if your lender still pulls FICO, great. Optimize for both. Clean all the errors, make sure you're looking at lower utilization, and document your rent so you're ready whichever model they use, because lenders may use the Vantage Score 4.0 or classic FICO during the transition. Here's a pro tip too. If you rent or any other bills that now qualify that aren't populating, you can also self-report through approved services or provide verified documentation from your landlord or property manager, or even VOE. More lenders are opening pathways, right, to now count rent and other bills. Now, if you're serious about building real wealth, book a call too with me and my team using the link below so we can help you get to financial freedom much more quickly. You can also grab my Lender Ready checklist below, which has everything you need to prep for either model. I want you guys to be ready no matter what. So this is my 10-step checklist I'm telling my clients to follow to put everyone in position for this change. Number 1, pull and monitor all 3 bureaus monthly. Before you shop, you have to know exactly what lenders will see. Confirm the balances, the limits, any negatives. Dispute all the inaccuracies fast. We are going to do this because errors are common and can cost 50 to 100 points on the score. Number 2, document on-time rent to past 12 to 24 months. If your rent isn't reporting, use a rent reporting service or gather bank statements plus landlord verification. This is your new superpower with Vantage Score 4.0, so don't let it go to waste. Number 3, utilization. The target is 1 to 9%. I want you to be paying before the statement closes so bureaus can see the low balance. If you can't hit that 9%, at least try for 30% utilization. Number 4, auto pay the minimum and manual pre-close paydowns. Auto pay protects payment history. Pre-close payments engineer low reporting balances, so we have to make sure we're doing it. Number 5, always be mindful of the age and mix on your credit report history. Don't close old accounts, no fee cards. Length of history is important, so keep the seasoned accounts open and only strategic trade lines during this process. Number 6, rate shop smart. Mortgage, auto, and tight windows. Do your pulls inside 2 to 3 weeks so they count as one event. Then freeze the apps until you close on either that property or another loan because you don't want that to cause any errors. Number 7, I want you to clean medical or any clerical errors early. If a paid or incorrect collection lingers, escalates without documentation, we need to be on it. Newer models can be more forgiving moving forward, but we need to fix it for the record. Number 8, build a both models file. Assume a lender can use the VantageScore 4.0 or the Classic FICO. Your job is to look strong either way. No lates, low utilization, verified rent, consistent identity across all the reports. We have to make sure everything matches so we can get the highest approvals quickly. Number 9, ask your lender which model they're going to use. Simple script. Does your company run the VantageScore 4.0 or Classic FICO on the tri-merge? Anything special you want to see on rent? These are the questions we need to be asking so we know how to present ourselves the best way. Number 10, timing your application. Apply for pre-approvals after these 3 things. 1, the rent is reporting or your documentation is ready. 2, the errors are cleared. 3, your utilization has posted low for 2 consecutive cycles. Remember, if a car dealer told you 690 was your score, but another app shows 750, you're not crazy. Lenders are using different models, like I said. FICO 8, 9, and 10T industry-specific auto mortgage versions are different from the VantageScore 4.0 in mortgages. Translation, prepare broadly and ask which model they're pulling from so we know where you stand on both the models. Bottom line is this. The scoring landscape just opened up. VantageScore 4.0 alongside FICO means your real-life habits like paying rent on time are finally going to count. Don't wait for the market to figure it out. Control what you can, monitor, document, clean, and time your utilization. Definitely comment below with your number 1 question about this change or tell me if your rent is already reporting. Next up, I want you to watch Trump's massive score changes for 2025 that we also need to be aware of in the next video. See you soon.